Happy Monday, everybody. Okay, so this week I'm going to talk about an earnings report. And, Greg and I are always trying to look for the clues in the news, right? And so here's a news headline that many of you probably saw, but I'm going to read into it a little bit. So, Home Depot came out with their earnings report, and it wasn't as good as people had hoped. In fact, it was I think the seventh quarterly decline in revenue that they've had. But the CEO said that he's expecting their fourth quarter to be even worse than their third quarter, and that year over year, they expect to see a decline in revenue by 3%, which is worse than last year, which was a decline in revenue by 1%. So this is a CEO who's coming out for a very well respected traded stock saying, heads up, everybody, we're expecting bad news. First of all, that's admirable. But second of all, you got to wonder what's going on, right? So a CEO is not going to say, hey, we're expecting bad news for our company. So everybody beware. They want to sell the sizzle of the steak, right? And try to get excitement going. But he's not trying to sell excitement. He's been very realistic and sober. So here's the thing. He starts to explain why revenues have declined and why he expects them to decline further. First of all, he said the consumer is anxious, he said, and wary of what the future economy is going to be. And he blamed it on rates. He said rates are too high, which is affecting home sales. And he said slower home sales are affecting their revenue because there's a lot of people that are sitting on the sidelines with 3% mortgages and they don't want to sell their home to buy a new mortgage at 5 to 7%, right? So there's fewer people selling homes, which means there's fewer people fixing up their homes with big Home Depot projects that they can then spruce up their house to get top dollar for. There's also fewer people buying homes that need renovations for fixer uppers. So he's blaming it on expenses. Interest expenses. The other thing about their stock, though, is their own internal expenses were higher. So revenue dropped, and internal expenses were higher, and they're cutting costs as much as they can. Well, they've also got a lot of debt themselves that they're having to pay off, and employee costs and all that. So not great. But here's the in between the lines that Greg and I were talking about this, and this is what we see. We've all heard, and you've heard it as well, that the Fed's going to be lowering rates, right? At least once between now and the end of the year. And that gets some of the talking heads on CNBC or whatever excited about the stock market. Well, this CEO knows better than anyone. Like Greg was talking about, you got the outside conversations. He knows better than anyone if the Fed's really going to lower rates. And whether they do or they don't, he's not expecting it to have a whole lot of impact on a positive impact on Home Depot revenue. So even if they do lower rates, which at this rate, who knows? But let's say they do. Even if they do, the CEO is saying we still expect a decline in revenue because the consumer is squeamish. So interesting, right? And we have seen this coming. We've been talking to you about it, and it's why we're not invested in Home Depot right now, or a lot of these high flyers that get a lot of the attention. Meanwhile, if you've noticed, your accounts are doing great, and that's why we're going to keep it. Okay, with that, you all have a great week. See you next week. Bye bye.